Welcome back to Morning Trade Live. I'm Nicole Petallides. We're seeing stocks higher today again, and we have a lot to focus on, all kinds of names. How about Zoom Video joining me right now here live at the desk? It's our pleasure to have Tony Zhang, Chief Strategist at Options Play, here in person, a rare appearance. Good to see you.
Good to see you as well.
So I know you're going to be talking about Zoom Video. I definitely want to also get your big picture, but let's start off with Zoom. Some of your thoughts on this name.
Yeah, you know, Nicole, I live in Australia, so actually when we do this show every 2 weeks, I'm actually doing it over Zoom. We actually don't think about how ubiquitous Zoom is as a company, but recently they've really turned into an AI play, actually, from my perspective. We have the AI companion tool that they've launched recently is their fastest growing product. Their enterprise model has been growing incredibly well, and from a valuation perspective, it's one of the most compelling stories within the AI space, trading at 14 times forward earnings. You know, there's really no other AI company trading at those types of valuations right now.
And it's amazing how Zoom continues to grow. We think about how we were in the space during COVID and all of, we started using everything, Zoom, and then Teams really came on, Skype, House Party. Did anybody use House Party?
I
used it once with my girlfriends. And so it's interesting, but Skype recently shutting down, right? That's good news for Zoom, I would think.
Yep, I used to do a lot of shows over Skype, and now that's all done over Zoom now, so that absolutely helps it. And just from a timing perspective, the stock has really struggled for the last few years, but recently we saw that breakout here above $80, which I think is incredibly important. Not only has it broken out above that $80 resistance level, it's outperformed the market as it did that. So I think there's a lot of accumulation for this stock recently. And like I said, trading at 14 times forward earnings when net margins are at 22% and expanding, I think from a valuation perspective, this looks like a stock that should be trading well into the low $100 range.
Wow, I was going to say 90. I mean, so you're talking about the bullish possibility here, the breakout, an attractive entry point. When you think about this, how often does this kind of valuation come along too, right?
Exactly.
It becomes more evident.
Yeah, it's been struggling at this valuation for a while, and largely because people see it as a telecommunications stock rather than an AI play. But like I said, the AI tool that they recently just launched is their fastest growing product, and I think investors are starting to pay attention right now. And when I say it should be trading in the $100 range, it's really more longer term. Short term, you're absolutely right. You have that $90 resistance level, so very short term, that's my upside target. But if we can get back above 90, we're looking at 125 and potentially even higher than that.
I mean, I didn't really think of Zoom and AI. You said Zoom's AI companion saw a 59% increase in monthly active users.
Yeah.
That certainly sounds huge. I mean, I don't expect, maybe they'll have more next month, but I can't imagine they'll have that rate keep going. But that's pretty impressive, isn't it?
Yeah, absolutely. Certainly that's a short-term growth that we're sort of seeing. But right now, the other thing is just the fact that net margins are at 22%. They're continuing to expand. So there's not a lot of stocks with those types of net margins trading at only 14 times forward earnings.
Tell us a little more. I think you have a specific trade that you can share with us.
Yeah, in the short run, there isn't a particular catalyst on the horizon. So I think right now what I want to do is I want to sell premium. So I'm going out to the June expiration. I'm selling the 80-75 put spread. You can collect quite a bit on premium right now because of the skew. You can collect just under $2 for that $5 wide credit spread, and that gives you a little bit of upside exposure right now that it just broke out above that $80 level. And if it does continue on, that's really where I want to be buying upside, buying call options, buying call spreads. But right now, I just want to be selling premium in this market environment.
Okay, thank you for that. What about the earnings that you wrote how earnings are coming up in a couple of weeks?
Yeah, in a couple of weeks, exactly. So because of that, implied volatility on options are relatively high, which is why I prefer to be a seller of options. And I think that, in the next couple of weeks, if we continue to see this accumulation, I think right before earnings, that's really where I could turn from a seller to be a buyer of options right into that earnings announcement.
What's your big picture as you talk about implied volatility? Right now, here today, I'll bring up the VIX, which is at 2210.
Yeah.
We've become a little bit more calm, a little desensitized to every single headline, though we're still a headline-driven market.
Yeah.
Some of your market thoughts?
I actually think that 22 VIX is perhaps slightly being a little bit too complacent right now. We have a lot of things ahead. The UK deal yesterday obviously was one of the primary drivers of VIX continuing to retreat. But we have some big trade deals coming up. We're going potentially to the negotiation table with China. I don't particularly think that that's going to be smooth sailing, through. And I think the market is kind of pricing in that everything's going to be smooth sailing going forward. I think there's a lot of cautious optimism right now that is good. We had some pretty good earnings recently, but the problem I think is that I think there's likely going to be some bumps in the road that the market is not pricing in right now, and I think my preference is to be long vol and potentially even adding a little bit of bearish exposure, especially with the SPX, S&P 500 approaching 5,800. That's a major resistance level that we haven't gotten above, and I think the risk to reward right now favors slightly to the bearish side, given that we're just against that 5,800 level, and the really only support down there is around 5,100 to the downside. So that risk to reward right now is skewed a little bit to the downside.
And I would say, even someone listening to you would say, you know what, he makes sense. I mean, I'll be long on volatility. We are somewhat complacent, and something's going to break some point. There's so much with China. We have the possibility of some talks this weekend. And the big picture that we have run up. We're up 12 of 14 days. Just this month, I'll say 1 month, we're up about almost 4% on the S&P 500. So it has been quite the momentum back up with this recovery off the lows. But the bearish move, do you think that the bottom is in? I mean, you don't have to answer that, but if you think a bearish pullback wouldn't be unusual to see a little bit of a pullback.
In my opinion, I don't think the bottom's in. I think there could be, I still think that there's the black swan event that we haven't necessarily seen just yet. I think that there's a possibility that the market is not pricing in right now, that we haven't bottomed yet.
That is very interesting, and I mean, that too could be very much a possibility, a black swan event. I mean, how could we possibly know? There's so much in the mix right now. And just the final thought, do you think that would be short-lived? I mean, would that be, depending on what the black swan event is, but the last one certainly provided a great opportunity for buying when we were at 4,835 on the S&P. If you bought around that area, you already made a good amount of money.
Yeah, I completely agree. We were looking at 5,100 as that major support level. We were buying around those levels. What really spooked me in the recent sell-off here is the Treasury market, and what the perceived risk-free nature of the Treasury market, and whether that is a bigger concern for us in the long run, because that is a major financial crisis if we do start to see that as an issue. So, that's the black swan event that I'm hoping doesn't happen. But that's
the bond market's already, we're seeing bonds selling off again. Yields have been going higher.
Exactly.
Is there that, I don't want to say anti-American, but sell America, buy less America?
Sell America is happening right now, so it's something that we have to be aware of. Look at the U.S. dollar. The U.S. dollar has not recovered with equities and bonds, and I think that's something we need to pay attention to right now.
Yeah. Tony Zhang, it's great to have you here in person, Chief Strategist at Options Play. Thank you, Tony.